Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson, and to all of you watching the video, it is a bone-chilling 107 here in Rapid City today. It is so stinking hot. We don't usually get these temperatures until like July or August, and even then, I mean, rare that we'll get a 107 day. Maybe a couple of days above 100 or at 100, but 107 is unheard of for June. So, anyway, it's very warm here today, and to be honest, I don't mind the hot, so I'm okay with it. Uh, but very, very warm. Now, the Bulls kind of have been, they had their day today where they ran things up a little bit, but let's catch you up from where we had been at. Look at this big tumble that we saw going all the way back to here. The talk last time we were together was this inverse head and shoulders. Okay, we broke that inverse head and shoulders, started our way upwards, but now that we've come back kind of below the necklines here, I got to tell you, I really can't give much more credence to the inverse anymore. Keep in mind that just because you have a head and shoulders or inverse head and shoulders doesn't mean you have to reach the target of that particular pattern. You can extend and try to find a target and give yourself at least a ballpark idea of maybe where it might go in the future. But the truth of the matter is you can't necessarily count on always hitting that particular target after you've broken some sort of formation, whatever it might be. In this case, just because we didn't get to what the target would have been doesn't mean that this wasn't a valid inverse head and shoulders. It just means we didn't hit the target. That's all. It's not a big deal. But now that we're back below the neckline, or what would be the neckline of these things, I really don't give them a whole lot of credence anymore. So we could still come way up here and hit what was the target of this inverse head and shoulders. But number one, I'm not really counting on it. Number two, I'm not really looking for it anymore. I was on the initial break back here a few days back or a week back, but I'm not anymore. So for your own trading, it's okay to keep those targets in mind, but don't expect that we'll get there. Just play the chart now for what it is. Since we've broken these necklines back to the downside, caution has to return, and you have to be a little bit more careful about what you're really looking at here. So we've had this move back down. It held this area nicely. Now we're caught between about 12,450 and 12,550 in a nice little consolidation here. Looking to see if we can kind of clear some of these areas. I really like shorting opportunities down in this area and back above this area for your long opportunity. We've come down. Now we're looking at maybe, is it a correction? Is it some sort of a new move up? It's really early to tell yet and too hard to discern whether or not we are going to blast upwards or blast downwards. And to be honest, I really don't care. I'm just looking for these breaks of these upper areas here for your long play, down in here for your short play, and then you can feel a little bit more secure in the fact that you're probably in a pretty decent trade if you'll just give it some time and break some of these lower or upper levels. Let's look at the daily and you can see what we're really struggling with. We have the 50-day moving average above us, we have the 20 and the 200 below us, and these are the areas to break for your long and your short. It really seems pretty clear to me. If we can somehow get back up into this area, the bulls are on their way and probably have a good chance of getting very near, if not at or above, these highs up here. But we've got to start one step at a time. Reaching 13,000 would be the first major step, and breaking and holding that would be the first step. So we won't get into that quite yet. We've got time to wait and see how that's going to all pan out. As it is, look at this. Keep in mind that since we broke this thing back in early June, late May, this 12.6 area, this has been the magnet. Run it sideways, and as we leave 12.6, we come back to 12.6, and we leave it above it, and then we come back to it, and then we go below it, and we come back to it. So 12.6 is right where the market feels is fair value right now, and that's where it wants to be. So give it some room, give it some time, take these breaks both long and short. As a general rule, I really, quite honestly, with the consolidation we have here, I don't have a bias either up or down. Now, you can establish one if you want to, and you can stick to it if you want to, but I think it's a little bit dogmatic to get into the middle of this whole I think it's going down or I think it's going up stuff, because thinking one way or the other doesn't help your trading. Ultimately, it's what is the chart telling you? And this chart in front of me tells me caution. Just straight sideways. There's nothing here telling me mega bullish or mega bearish. Matter of fact, there's not even anything here telling me tomorrow to be bullish or bearish. I don't even have a bias going out that far. So you want to be very cautious with your trades, and the best thing you can do is sit on your hands. Don't blow up your account. Don't waste your money gambling or guessing at where you think it's going to go. Find logical places to take those trades and move on it from there. And for me, if you haven't been through my mentoring course, I'm just going to tell you to be more cautious than anything else. Wait for up here, wait for down here, and take it from that direction. NASDAQ 60 minutes, same type of thing. We broke this little inverse head and shoulders, was not able to hold it. Now we're back into these lower levels. You're looking for pushes back down here around the 25 area and 26. It's a 100-point range in through here, and you can play with it if you want to in between there, but from the more conservative standpoint, there's a 100-point range you need to be looking at, 2,500 and 2,600 for your trades going forward. If we take a look at the daily, you can also see here where we lost the 20-day yesterday and regained it today. So look at what we have. When you get into a consolidation, you also get the moving averages start to consolidate as well. They all want to lead towards one place when you get into a consolidation. Remember I talked about the 12.6 mark? Look here at the 25.5 mark on the NASDAQ. Run that line straight across and we go away from it, back to it, away from it, back to it, around it, around it, around it, away from it, upwards, back to it. 2550 is the magnet. This is where the market just wants to hold right now before that next major breakout. When you get that, you get moving averages consolidating in the same spot, which leads to what I think good observations for both support and resistance. So you're looking for breaks here, you're looking for breaks here. Take it when you can get it, especially if we can get the NASDAQ to run. Now, I have not seen the strength from the NASDAQ, which is a bit frustrating because usually when the markets go up, I like to play the NASDAQ to the upside because it usually runs the hardest, but it hasn't been the case necessarily. Today it was the biggest mover of the day, which is great, but I haven't seen it consistently, and that's frustrating to me. That tells me that the buyers just aren't ready yet. They're not there yet. When it starts to get really hot and heavy and the buyers do ever get serious about it, then you'll start to see the NASDAQ take off in a big way, and we should start to see lots of strength come back to Apple and Baidu and Google and all the other big dogs out there from the technology standpoint, and that'll play very nicely with what the NASDAQ will do at that point. But right now, we're just stuck in this straight line going nowhere. From a weekly, same thing here. Look, you can more clearly see it on a weekly. If I draw a line right here, guess what? We're still at that line right there. We haven't gone anywhere. So very, very hard if you're a swing trader, if you're an investment trader, if you're not sure about when to get in and more importantly when to get out. Those two things can really, really break you down. Why? Because you get caught in the middle of this chop and you're like, well, do I stay in? Do I not? Do I do it? What do I do? And now you've sat around for 1, 2, 3, 4, 5 weeks, 6 weeks, ultimately what's working on 7 weeks of sideways chop going, what do I do with these trades? Where, maybe you could have been in, you could have been out, made a little bit of money, and now holding for that next major move. So don't be frustrated necessarily if you're a swing trader or an investment trader and haven't been able to do a whole lot the last few weeks. There's good reason for that. And this is it. The easiest thing to do, guys, is look at a chart. Can you draw a straight line and encompass most of price? Yes, you can. Well, guess what? Hello? It's probably not a very good trading environment if you're looking to make profits because you're up and down and past this stuff. These are good trading environments. Straight up every week, week after week, candle after candle, wick after wick, body after body. This is exactly what you want to see if you're in a trade. I don't care if it's an intraday trade, if it's a swing trade, if it's an investment trade. This is good trading. This junk back here that we saw for months on end, this stinks from an investment standpoint. That's when it's really pertinent and very important to know when do I get in and when do I get out, because then you can play some of these choppy type motions, which by the way is what the market usually does. It doesn't usually go straight up and it doesn't usually go straight down. Even though you can make good money during those times, that's not how the market typically works. It's this choppy sideways crap that usually chews you up and spits you out. That's why it's important to know if you know how to play it, you can make money in these environments. Otherwise, you sit around on your thumbs going, what do I do? Sometimes you get chased out of something only to find out 2 weeks later you'd have made a whole bunch of money if you'd just stayed in. So there's good reasons to know how to play this kind of chop. That's where we're at right now, chopping sideways. SPX 60-minute back below its inverse head and shoulders, right around the 1330 area is that. Right around the 1330 area is also our magnet. That's where it seems to want to hang out, right around the 1325 to 1330 area. The move today by the Bulls, not too bad, but 6 points. I mean, it's 0.5%, but it's only 6 points. There just isn't a whole lot of buying going on in here right now. So like I said, I'm very torn on, are we up, are we down? You go long up here, you go short down here, and that's all you can do with this trade. Especially if you're a swing or an investment trader. You're really holding out for one of those two moves, because right now it's all straight sideways. Been up a little bit, we've been down a little bit. We're waiting for that next major break. You're best suited to just kind of wait it out as well. Notice how we've been down a couple days, up a day, down a day, up a day. Is it down tomorrow and then up again? Who knows? I don't even want to play the chop. But you can see the moving average is doing the same thing. We got the 50 here, the 200 here, and the 20 right in the middle, and we're just basing sideways, waiting for that next major move. Once again, a beautiful setup for an overhead and a lower support area, just waiting for one of those to go. VIX daily, you can see, I love that 20 area. We're right at that 20 area. The market is on edge. So we had this kind of little head and shoulders thing set up, and we blew back below it. Now we're right back up into it. The point is, close enough to the $20 range on the VIX where I still think that there's fear left in the market. That complacency came in for a while, and now it seems the market isn't exactly sure where we're going next. So the hedgers come out, and the puts are put on, and the calls are put on, and the options get wild, and the volatility goes up, and then there you go. It's reflected in the VIX. So here we sit right around that 20 area, waiting for that move to be done, and not only done, but substantiated and confirmed for a few days. Let alone a week or so, because that weekly VIX here, as you can see, we're back above it, we're back below it, we're back above it. We're hanging out right on that breaking edge of that $20 mark, which is really, for me, that level of complacency and or fear, depending on whether or not we're above or below it. FAS on the same thing. We got a beautiful break to the downside. We're not able to trade it because it all happened in a big old fat gap. Hate those things when they do that. Otherwise, though, looking like a nice move down. Maybe this is some sort of a correction back to the upside. What you're looking at is the same thing you're looking at on all the indices. Short back below here. I really kind of like an aggressive short back below 78, and I like a long back above. I'd probably wait for this thing to break 85. So if you could get back below 78 or 85, there's your move on the FAS, both long and short. Same thing here. You're holding above the 200 and the 20-day moving averages as it just sits quietly waiting for its next move. But either one of those spots that I gave you work beautifully for even a swing trade, both long and short. The FAZ then, of course, if you like to prefer to play this, especially if you're going to play it long. Markets go down, this goes up. Some of you are in funds where it only lets you play things long and not short. So in this case, you're looking for pushes back above 26 and pushes back below 24. I think that's pretty clear here based on what I see. Keeping a close eye on Big Red that's rolling its way in and through the 2650 mark. And that daily kind of works the same way, back above 26 and back below 24 as it's trapped between the 20 and the 50 moving averages. Just kind of sitting here wandering sideways. 26 and 24 I think make for really, really good opportunities to the long side. Let me just change this ever so slightly. Make sure it gets back above the 20-day moving average, which is right now at 26.29 to probably tomorrow it's 26.25, something to that effect. Let it clear the 20-day before you get into that. So let me make it the 20-day moving average and 24 down below you. That would be your trade both long and short. That'll wrap it up for the video, guys. We had, over the last week, quite a bit of movement. Up and back down, and in the week that we have not been together, we haven't gone anywhere. We're right back to square one. So keep in mind that these tricky trades are tough. It's tough to get into something and stick with it for any length of time because we're not going anywhere. But don't be frustrated, because if you look at the chart and be objective about it, we're not going anywhere. So don't be frustrated if you're not making money on a longer term hold for a few days and it seems like you can't get anywhere. It's not really what you're doing necessarily. It could be just what the markets are flat out doing. Okay, so the newsletter, $28 a month. It's $1 a day. I do a whole lot more in that. I got an email today from someone saying that, what do you mean by more lines and stuff like that? Well, exactly, more lines. Like I put in these support resistance lines on some charts, but like if you saw the newsletter one, this has got lines all over it. I've got lines drawn up and down and trend lines and this and that, and some are blue and some are gray, and we're looking at this and we're looking at that, and here's your mark and here's this, and I get a lot more exact with my entries. Sometimes I'm a little bit broad in the daily videos about, up above here, down below there, and kind of leave it to your best guess. And a lot of people that's all they need. They're good with that. Some people would prefer a little bit more exact entry. Where exactly are you talking about? Then I'll give you in the subscribers newsletter a lot more exact entries below this number or above that number, and then look for this as a target and take partial profits here, and look for this to be strong overhead and that type of stuff. It's just a lot more exact in what I do. So the newsletter, $28 a month, and then the mentoring, that's the big dog. That's the one that I really, really like to see people interested in, especially if they love to trade but can't seem to make it profitable for themselves. They just can't seem to figure out what they're doing wrong, or those that maybe want to make it a full-time position at some point. Now, don't let me fool you into thinking that you can do it in the matter of 3 weeks, 4 weeks. It doesn't work that way. It's like any other job. It takes time to really assimilate how to do all of it. Because the course itself isn't, okay, show me what you traded today and let's find out how we can do it better. It's nothing like that at all, as a matter of fact. We get into the fundamentals behind the trading itself, and we get into the just a lot more in-depth, what would be, I think, course book material than anything else. And then it's just you and me. It's one-on-one. There's nobody else listening in or playing along, so we can move at your pace. And I do it on your time. If you can only work, or if you only have time after work on Tuesdays and Thursdays, then great. We work that day. And we find times maybe on the weekend, in the mornings, at night, late at night, early in the mornings, doesn't matter. I always find a time for my students to kind of get in and get the coursework done. So you don't have to worry about taking time off of work. You don't have to fly here to get any information. Nothing like that. I do everything I can to save you money on the back end, as well as within the course itself. I think the course is very fairly priced. So you can write me about that, let me know, and I'll send you some more information on that and see if it's a good fit for you. Call me about it, and we can talk about it if you need to do that as well. All right, guys, I'll let you go, and we'll try again for another video on Thursday if we get some real good motion. See you then. Bye.